Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate mumbo jumbo. Today we're diving into a filing from Apollo Debt Solutions BDC. Don't worry if that name sounds complicated, we'll break it down. Let's just say after looking at this, you might want to double check where your money is going. The main thing to know, the company sold a bunch of shares and is handing out some money to its investors. Let's get into it. First up, the company sold a bunch of shares. These are called Class 1 common shares, which are basically ownership stakes in the company. They didn't offer these shares to the general public. Instead, they sold them privately, mostly to special groups set up just to hold these shares. Think of it like selling cookies to a specific club, not the whole school. So as of early February, Apollo Debt Solutions sold over 19 million of these Class 1 common shares. That brought in a whopping $484 million. Basically, the company got almost $500 million in exchange for giving away a small slice of ownership. Next, let's talk about the money. The company announced some distributions, which are like dividends, payments to shareholders. Basically, they're sharing some of their profits. For each shareholders of Class I shares are getting 20 cents, Class S shareholders will get almost 18.5 cents, and Class D shareholders are getting a little over 19.5 cents. Now that 20 cents for Class I shares is made up of 18 cents as a regular payment, plus a previously announced special distribution of 2 cents. These payments are for shareholders who are on record, which is as of the end of February, and the money will arrive around the end of March. Shareholders can take the cash or reinvest it and buy more shares of the company. There was also a special distribution announced late last year for 6 cents per share, paid out in 3 monthly installments of 2 cents each. Let's move on to how the company is actually doing. As of the end of January, their net asset value, or NAV, per share was almost $25. A month before, it was a tiny bit higher. You can think of NAV as roughly what each share would be worth if they sold all the company's assets and paid off all debts. For Class I shares, the returns, that is the money investors made for the past month, was a little over 0.5%. Looking back further over the past year, it was 11%. Since the fund started about 3 years ago, the yearly average return has been almost 9%. This is important. Past performance does not mean this will continue into the future. As of late February of this year, the distribution rate, meaning how much they're paying out compared to the share price, was almost 10% for Class I shares. The company's investment portfolio, all the stuff they own, was worth over $15 billion at fair market value. This was spread across over 300 companies in about 50 different industries. Nearly all of their investments were in first lien debt, meaning they get paid first if those companies go bankrupt. Almost all were floating rate debt, which means the interest they earn changes with market rates. The average earnings of the companies they lent to was almost $300 million. When they make a loan, the loan amount is usually about 40% of the company's value. The average yield or return on their loans was about 9.5%. The amount of debt those companies have compared to their earnings was about 4.7 times, and their ability to pay interest was about 2.2 times. The company's net leverage ratio, a measure of how much debt they're using, was just over 0.5 times. They also had almost $3 billion available under their borrowing agreements. It's worth noting that the returns were different for other share classes. For Class S shares, excluding fees, the returns were a little lower. When you include the fees, the returns were even lower or negative for the 1 and 3 month periods. Class D shares did a bit better. Remember, these are past results and don't guarantee future performance. Also, if you buy these shares through a financial advisor, they might charge you extra fees. The annualized distribution rate, that's how much they pay out each year as a percentage of the share price, was also different for each class. It was almost 9% for Class S shares and almost 9.5% for Class D shares. Let's get back to the numbers. The NAV per share, which is the company's net worth divided by the number of shares, was the same for all share classes, almost $25. The company's total net worth was over $10 billion. Their investment portfolio was worth over $15 billion, and they had over $5 billion in debt outstanding. That's a debt to equity ratio, comparing debt to net worth, of about 0.5 times. Again, their net leverage ratio was about 0.5 times. Finally, a word on shares. The company is still offering up to $10 billion worth of shares to the public. They've also sold shares privately. Here's the breakdown. Through the public offering, they've sold about 122 million Class I shares for $3 billion, 87 million Class S shares for over $2 billion, and almost a million Class D shares for almost $25 million. Through private sales, they've sold over 232 million Class I shares for almost $6 billion. The totals add up to 443 million shares for almost $11 billion. The company plans to keep selling shares monthly. Okay, that was a lot of numbers and details. Let's step back and see what it all means. Apollo Debt Solutions BDC is basically a lender. They raise money by selling shares and then lend that money out to other companies. They make money from the interest those companies pay them. Now, looking at Apollo Debt Solutions, there are definitely things to like. They've got a huge portfolio spread across many companies and industries. This helps reduce risk because if one company goes bad, it doesn't hurt them too much. They focus on first lien debt, meaning they get paid first if a company goes bankrupt. And most of their loans have floating interest rates, which is good if interest rates go up. However, there are also some things to watch out for. Their returns have been okay, but not amazing. And some share classes have high fees, which can eat into your profits. Also, they are using debt to make more money. If they take on too much debt, they may risk not being able to pay it. So, is Apollo Debt Solutions a good investment? It really depends on your own situation and how much risk you're willing to take. If you're looking for a steady income stream and are okay with some risk, it might be worth considering. Based on their current performance and the market conditions, I'd say a reasonable price range for their shares might be between $23 and $26. Given the points I just made, I would lean slightly bearish on them. Thanks for watching Corporate Decoder. If you found this helpful, please subscribe for more deep dives into the world of corporate finance.